everyone. Welcome to this month's market update for June 2025, where we're going to cover real estate and mortgage. I'm Missy Stegers, broker owner of MStagersRealtyPartners, and today I'm bringing you a breakdown of what's been happening in the San Antonio real estate market and what it could mean for whether you're buying, selling, or just keeping an eye on things. Each month, we use the latest data pulled from the previous month, and June brought a few surprises, along with some steady trends. So remember, we're 30 days behind on this information. Let's jump in. The market snapshot in San Antonio remains what we consider a balanced market, meaning sellers have to give some, buyers are getting some. We have 5.88 months of inventory. What that means is there's a healthy mix of both. And if it keeps going up, we are definitely headed to that buyer's market. That being said, every neighborhood behaves a little differently, as well as the zip codes around town. We're starting to see homes sitting longer and face more pricing pressure due to increased competition. So pricing is going to be key. Here are the key numbers. Total sales are 3,023, down 1% from this time last year. Average sales prices, well, 392,796, which is up 4%. And days on market holding steady at 75, although they're creeping up. The price per square foot, though, is back up to 180, which is up 1%. We'll take it. Closed to original list price, 93.7. That means most sellers are negotiating about 6 to 7% off that list price. Ultimately, it means they were priced too high. New listings, 4885, down 10% from last year. Active listings, 16,665. And the average rental price is up some, $1,922. What this means for sellers, if you're planning to sell your home, here's the bottom line. Be strategic. Don't overprice. With more listings hitting the market, buyers have more to choose from, and your home needs to stand out. It means it should show well, be priced appropriately, and ideally move in ready. Overpricing can lead to longer days on market and bigger price cuts. That's how you get that wide span from 100 to 93%. What this means for buyers, you've got more breathing room now. You can negotiate those closing costs. Inventory is up, so you might find yourself with more options and a little more power at the negotiation table. Still, getting pre-approved and knowing your numbers, because well-priced homes do sell and will sell much quicker than the rest of the market. New construction, continuing to see builder activity across the market. They've got deep pockets. Many are offering rate buy downs or closing costs help, and Jen can tell you about some other options. So keep that in mind when you're comparing resale versus new homes. That's a wrap for the June market update. And whether you're buying or selling or just keeping tabs on the market, staying informed gives you the upper hand. And if you'd like anything personalized in a home value estimate from us, please reach out. Now I'm going to let Jen tell you a little bit about the mortgage market. Take it away.
Let's do it. So mortgage rates for conventional loans are sitting at right around 6.85%, depending on your qualifications. And then government loans, which are always a little bit lower, sitting around 6.4%. So that's
that's low.
It feels low, right? It's way better than 7 where we were just at.
Yes.
So that's FHA, VA, USDA. Those are the government loans. The CPI, Consumer Price Index, just came out today. That is a measure of inflation. Did show inflation went up by 0.3%. Year over year, we're up from 2.4 to 2.7, which isn't great news. It's moving in the wrong direction, but in good news, it's in line with the expectations. So the market has already priced that in. So where interest rates are at right now, it includes that. The biggest thing to remember about interest rates is they're based on the futures market. So economists look at what they're expecting things to do in the near future, and they price it into rates now. So if we think rates are going to go down, we'll get lower rates now. We think they're going to go up, we'll get the higher rates now. So there's the good and bad with that. We do have the PPI, the Producer Price Index, coming out tomorrow. That is the Fed's favorite measure of inflation. So we'll see how that looks tomorrow.
Let's see.
No. But the Fed has 4 more meetings this year, so it is possible for a rate cut. Some of the Fed members think we should do a lot of rate cuts. Some think we should do 0. It's hard to say what they're going to do. The average expectation is 2 rate cuts of 0.25% each, which the market's already pricing in now.
Right.
So
That's what's key. The market has already priced that in. So if you're thinking it's going to drop a lot,
right, so it's probably better not to wait.
Exactly.
Right? Get that good deal now. We can get a good deal on a home with the extra inventory.
Yeah.
We can always refinance later. We have a no lending fee refinance at Legacy, and a lot of lenders are doing that. So it's a great way to get a good deal now, refinance later, marry the house, stay at the rate. We all have heard that. And so in terms of the Fed funds, we'll see what happens. But the biggest thing to keep in mind, I always tell everyone this, when the Fed does a Fed rate drop, that's short-term borrowing, not long-term. Mortgage is long-term. So if you see a 0.25% rate drop from the Fed, don't expect to see that exactly at mortgage. They usually follow in line with each other, but they aren't dollar for dollar or exact percent for percent. So that's the biggest factor to keep in mind.
Well, thanks for joining us today on the market update and the mortgage update. I'm Missy.
I'm Jen Bailey.
And we are so happy that you spent some time with us. Stay tuned for the next month.